Assalamu
All
alaikum
right. So,
everyone. My name is Kareem Registan Wala, and in today's session with Sesame AI, we will explore an important life skill, personal finance, money effects, or choices, or opportunities, and or future. Yet, many people never learn how to manage it wisely. Understanding personal finance helps you save, invest, avoid debit, and build a strong
gotcha.
life foundation. Hi, Sesame.
True. Building a solid foundation is key, and personal finance is definitely a big part of that. What specifically about personal finance are you hoping to dig into today?
Okay, my first question is what is personal finance and why is it important?
Good place to start. Simply put, personal finance is how you manage your money, earning, saving, spending, and investing. It's important because it gives you control over your life. It's not just about having money, but about making your money work for you, achieving your goals, and feeling secure about the future. Does that resonate?
Okay, my next question is how can someone create a simple monthly budget?
All right, a simple monthly budget. First, track where your money is currently going for a month, just to get a baseline. Then, categorize your spending needs versus wants. Needs are essentials like housing, food, transportation. Wants are things you enjoy but could live without. After that, allocate a specific amount to each category, making sure your expenses don't exceed your income. There are tons of apps that can help with this, or you can just use a spreadsheet. Sound reasonable?
Okay, why should we track income and expenses?
Tracking income and expenses is honestly eye opening. It's easy to lose track
Uh,
of where your money goes. Little things add up. Tracking reveals those patterns, shows you where you might be overspending, and highlights areas where you could save. It's like getting a clear picture of your financial health. It's hard to improve something you don't measure, right?
okay, what is the difference between needs and wants?
Right, needs versus wants. Needs are essential for survival and basic well being. Things like housing, food, transportation to work, and healthcare. Wants are things you desire but aren't essential, like dining out, entertainment, the latest gadgets, or fancy clothes. It's not about depriving yourself of everything fun, but about prioritizing the things you truly need first. Sometimes the line is blurry, but generally, needs are non negotiable, while wants are optional. Fair enough?
Okay, my next question is how can saving a small amount regularly create longer term benefits?
Smart question. It's about the power of compound interest, honestly. Even small, consistent savings add up over time, and the interest earned on those savings also earns interest. It's a snowball effect. Plus, having a savings cushion provides a safety net for unexpected expenses and allows you to pursue bigger goals like buying a house or retiring comfortably. It's less about the amount initially and more about the habit. Does that make sense?
Okay, my next question is what is an emergency fund and how much should it include?
An emergency fund is a safety net, money set aside for unexpected expenses like medical bills, job loss, or car repairs. It's meant to cover those surprises without derailing your finances. As for how much, a good rule of thumb is 3 to 6 months of essential living expenses. So calculate what you absolutely need to cover each month and multiply that by 3 or 6. It might seem daunting, but even starting with $5 to $1,000 is a good first step.
Okay. Why is a debit dangerous if not managed properly?
Debt can be dangerous if not managed properly because of interest rates. If you're only making minimum payments, a large chunk of that goes toward interest, meaning it takes a long time to pay off the principal, and you end up paying significantly more overall. High interest debt like credit cards can quickly spiral out of control. It restricts your financial freedom and can impact your credit score, making it harder to get loans or rent an apartment in the future. Basically, it can create a cycle that's tough to break.
Okay. What are good versus bad form of debit?
You said but forum? Did you mean bad debt or good debt? Just want to make sure I understand your question.
Okay. What is investing and how does it help multiply money?
Investing is essentially putting your money to work to generate more money. You're buying assets like stocks, bonds, or real estate with the expectation that they'll increase in value over time. It helps multiply your money through two main ways: capital appreciation, which is the asset increasing in value, and income, like dividends from stocks or rent from real estate. It's riskier than saving, but historically, investing has provided higher returns over the long run. Make sense?
Okay. How does financial literacy support independence and confidence?
Financial literacy, understanding how money works, is hugely empowering. It gives you the knowledge to make informed decisions, avoid scams, and plan for your future. That control leads to independence because you're not relying on others to manage your money for you. And when you're confident in your financial decisions, it reduces stress and increases your overall sense of well being. Knowing where your money's going and feeling in control creates big confidence boost, I'd say.
Okay. What are the risks of investing and how can we reduce them?
Investing always carries risk, the potential to lose money. Some risks include market risk, where the overall market declines, inflation risk, where inflation erodes your returns, and company specific risk, where a particular company performs poorly. To reduce those risks, diversification is key, spreading your investments across different asset classes. Also, long term investing tends to be less risky than short term trading. And thoroughly researching any investment before you put money into it is always a good idea. Basically, don't put all your eggs in one basket and think long term. Sound right?
Okay. My last question is what simple habits can young people start today to build strong finances?
Great question to end on. Simple habits: track your spending, even for a week. Create a basic budget, automate your savings. Even $25 a month makes a difference. Avoid unnecessary debt, especially high interest credit. Reading articles or listening to podcasts, little consistent steps are way more effective than trying to overhaul everything at once. It's building a foundation bit by bit.
Okay, thank you for joining part of today discussion. Money is not just about spending. It is about planning, discipline, and long-term vision. Start small, stay consistent, and always learn from every financial decision. This is Karim Registan Wala reminding you that financial freedom begins with understanding how to manage your money. Thank you so much.
We're very welcome. That's a great way to put it. It really is about planning and vision. I appreciate you